Good evening, and welcome to the ShadowTrader Video Weekly for Sunday, January 26th, 2014. If you recall from last week's comments, I was saying cautiously bullish, and even though the market absolutely fell apart really hard on Thursday, Friday was probably the biggest one-day decline we've had since probably over here, I would guess. I don't even know if these 2 days are equal, or it looks like Friday was greater. But I still kind of stand behind my comments because, the market really wasn't showing any signs of falling apart. At the end of last week's video, when we recorded it, we were kind of stuck in this chop here, and we just kept closing kind of near the highs and making some, higher lows. But then what had happened, or what ended up happening, I guess, towards the end of the week is that buyers just ran out of steam, coupled with a catalyst of some sort of emerging markets nonsense, whatever, and anyway, that caused the market to tank. So question is where to from here? So I've drawn in what I think is some important support here. I want everybody to check out this area right here, which is right in the 1780 area. Notice that we had a prior high here, which was a breakout point, and then the market supported right there as well. That is also the terminus here of the dominant trend line, and I know there's some dangling stuff here, but I'm going to leave that alone. And I'm going to assume that this 1780 here is the right endpoint to this trend line. And the reason I say that is because notice that we started here, we had a little bit of action here, we had perfect touches, came in, perfect touch, and then we had a little bit of dangling stuff, and then, it's just been, it feels to me like it's been the proper channel. Now, obviously, we could find ourselves somewhere in between here, but I do think that this 1780 is going to be of note, and I think there is going to be some support there over the next couple of days. And if we go over to the profile, I think that there's some merit to that as well. And I'm going to show you how some things are kind of tying in with this 1780. So let's switch over to the profile here. And I'm going to go first to the regular trading hours session here. We'll go back to that composite in a second. Remember, if you're interested in this software, you can get it at a discounted rate right here, which is at www.windowtrader.com/ShadowTrader. This is, as I've said before in last week's video, this is one of the most useful pieces of software I've ever used. It's amazing. There's just so much to it, so customizable, so many different things it can do. And one of the things, obviously, which it does is show us profile shapes, right? Everything you're looking at here is a distribution. These are each individual days of the market profile. And what I wanted to draw your attention to is a number of things that I think point to the fact that this entire move, at least on Friday and somewhat on Thursday, could be characterized as one large liquidation break. And it's important to understand when we talk about liquidation break, what time frame is in effect, right? We have liquidation breaks that are very short-lived, for instance, on a gap up, and you get a market that sells off big, and maybe the top of the distribution kind of looks like this top part here, right? And this is kind of a liquidation break, except this one followed through to the downside. This sometimes is a liquidation break that would be like of a day time frame variety. Maybe overnight traders get themselves overly long and the market sells off. But remember that there can be liquidation breaks in the larger time frames, and sometimes those take longer times to play out, take a longer time to play out. And so I think that Thursday and Friday may have been a liquidation break in the intermediate to long-term time frame, and that means that what it's doing is it's taking potential sellers out of the market, and that the market still has a chance of actually making a new high in 2014 once again. Even though on the surface, if you just look at this chart here, it would seem to you like, no way, never going to happen, right? Market's never going to turn around and go back up. But going to the profile, I think there might be evidence of that. First things first is the fact that, remember, at the high, all around here, there was no meaningful excess. Remember, in order for the auction to end the proper way, we want to have the top of the auction, for instance, look like this, maybe even longer. You want to have some excess on the top. This is just a few ticks. This was a double top with no meaningful excess. This is lower. This doesn't count here because it's much, much lower. So what if I took all of these days here and I just put them together, which is really easy to do with this software. So I know that this is a huge balance area here, and this is another balance area here, correct? You've got all this kind of big balance at the top. You've got it here, then you have a balance area here, and then the market falls down out of there. And my point is that through all of this time period here, all of this included, right, there's absolutely no real excess on the high. So what would happen if we put all this together to see how it looks like so? This will really give you a good example of what this distribution looks like. Boom. All of those days put together make their own distribution. And this is what they look like. And again, when you look at this, does it look symmetrical to you, or does it look like it's missing something up on top? I think to me it's like missing something on top. It looks okay down here, but where's the top part? It's kind of missing, right? You're missing that excess on the top. So the market has really come to a high, and it's really made a poor high. It really has no excess on the top, and that's not the normal way for an auction to end, for the up auction to end. So that leads me to believe possibly, and I'll split this back into days. So looking at this back again, it's split into days again. Let's now address what happened on Thursday and Friday, right? Thursday sell off here, then gap again, sell off again. However, in keeping with the theme that this could just be a liquidation break on a larger time frame, and we could still have bullishness in the market before, say, the end of the year, right? I'm drawn to the fact that Friday's action was very, very stretched out. Notice that the profile is very, very thin. Okay, it's not really good structure. It's kind of stretched out to the downside. This tells me that sellers are kind of selling in a panic, kind of hitting the button at the wrong time, just like get me out, get me out, get me out, right? I also noted that there is not migration of the point of control downward in Friday's session. The point of control, which is the fairest price to do business, where the greatest number of contracts went off, and I'll make this bigger so you can see it. It's the TPOs here highlighted in green. Notice that we had 49,000 contracts go off right at that level. Thus, it's the point of control, right? All up in this area, you have lots more contracts going off, right? 40,000, 30,000, etc., right? But when you go down into the bottom of the profile, where price actually closed, right? Price closed here, dead on the lows. There's no migration of the POC lower, right? So you would have expected at least that there be more volume transacted at some of these lower prices, and also that the profile would be a bit fatter. This profile is fattest up in this section, up in the 1800 section, around the whole number there, and not so much down here. So just kind of a signal of poor structure. Now, going back to that 1780 that I was talking about, let's look at it. Let's go right back to the chart here for 1 second. There's your 1780, right? So you know it's prior highs, prior lows, trend line support. And let's look at a composite profile now, which is basically all the volume from quite a big chunk of time pushed over onto the y-axis on the right-hand side. All right, so given the normal theory that market is drawn to high volume areas such as these and is repelled by low volume areas, I want to point out, look at the low volume area coming up right here. The next low volume area is right there, and it's at 1774. The cash market right now is running about 6 points ahead of the futures market. Futures are trading at a discount to cash because it's a young contract, right? This contract is not going to expire until March. When it does, then the prices, they slowly converge as it gets closer and closer to expiry. So 1774 plus the 6, which is the differential, takes you to 1780. So it could be interesting. So this is what I'm thinking is going to happen, is that early next week, you're going to have a move down in the futures to about here, and you're going to get a playable bounce right around that 1780 in the cash, which is about 1774 in the futures, and that is going to tie in with this area here. And notice here your prior lows here right around 1774, right? This low is 72, this low is 77, and this low all the way down here is actually 67. So that one's a little bit lower, but right in this area. All right, so that's what I'm going to be looking for early in the week. The other thing I want to mention as we go out of this video is the fact that next week is going to be a very, very big and pivotal week for a number of reasons, mostly because of earnings and also Fed. So be aware, there's an FOMC announcement next week at 2 p.m. on Wednesday. It is also the week that Apple, Amazon, Google, Chipotle, MasterCard, and Baidu Inc., aka Baidu, all report. They're all reporting next week. So you've got a huge number of Jumbotron stocks all reporting, and that could shake things up. There's definitely going to be some trading opportunities in those names, I'm sure. All right? That's all the time I have for today. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.